Hello folks, I'm L.A. Little and this is your daily TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today and what does it tell us about the coming ones. Now, I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. If you want to contact me, send me text at this number. You can email me, support@tatoday.com. I'll try to take your questions and address them during the show. 912-9110 is the text line, so you can shoot them over there, or of course you can type them in. Show probably won't be that long, so if you have questions, you probably have a good chance today to get them answered. As far today, what happened? Well, it was actually an interesting day in that we have, this week you've got a lot of data, actually a tremendous amount of data. It's the first of the month, right? So you get the PMIs, you get them around the world, so you get a sense of what's happening economically around the world. It's the first snapshot as to what is happening now, right? And most reports, they lag quite a bit, but the PMI is fairly up to date. So the PMI comes out in China, is better, right? Europe, not so good. Market loves it, right? China's been struggling. They're getting better. Europe, not so good. That's fine because that says, hey, they're going to do something with the ECB on Thursday. It's going to cement the deal, right, is the way they're looking at it. Then our PMI number comes out, the U.S., and it's like 53 or something. And it's like, whoa, what was that? The market sells off. And then immediately the market goes back up because they do revisions. And people start tweeting something's wrong. They do a revision. They pump it up to 56. And then, like 10, 15 minutes later or something, they pump it back down to 55.3, I think it was. But it was still better. But there was a lot of confusion surrounding the number today. Supposedly a software glitch. I guess that's excusable. I can't remember the PMI doing that. But anyway, the Dow was up 26 on the day, pretty much flat, 16,743. But that takes it up to the highs, right? I mean, it's been trying to get up there, and here we are back up there, pressing up against the highs. That previous high, I think, was 735. And, it's over. So the Dow at new highs. S&P tacks on another $1.40. That's a new high, 1924.97. New closing high, new intraday high as well. Composite down 5.5. Apple has its developer confidence going on. No big surprises there, so Apple sells off. Google gets hit because Google announces $1 to $3 billion that they're going to put into a satellite, a celestial orbit of satellites to bring internet around the world, especially to those to those places where we don't have it, where the world is not saturated yet. So $1 to $3 billion, big price tag. Google sells off. So you got 2 of the big 3 components in NDX selling off, yet only down 3.8 points. Russell was the loser, down 0.5%, down bigger off that PMI number, comes bouncing back afterwards. So ends up, it was down about 1%, ends up about 0.5% lower. This continues to struggle. Has struggled, continues to struggle. Elsewhere, commodities pretty much sold again, but it was reasonably flat. There's been no real bounce there, and bonds get sold off. And bonds have been on a tear. We've talked about bonds. We'll look at the chart again, but bonds, they're pushing into resistance. And it's going to be very hard to get over that area, that 114 area, I believe the number was, because that's, you know, that's big resistance on the weekly charts. So let's go to the charts. Actually, I had a question on Flex, so I was taking a look at it. I'll come back to it in a bit. I don't have the ending numbers still on the indexes, so I'm going to look at the SPY. The lows, excuse me, the volumes today were lower across the board. I did pull it up over here on stock charts so that I could see what the volumes were and see that they actually were lower. They were. So in the case of, let's take the three indexes, the major ones I can get volumes on right now. The NDX presses lower, lower volume, right? What does that do? That flips around, leaves a hammer. That thing's going to try to go back up and break out again. So the NDX still trying to push up, even though it's had this huge run already. Composite down on lower volume as well. You got 1.8 here. You went into it with 1.6, so you're testing into that low. You can't get underneath it, or at least you don't get underneath it. This thing still wants to come back and test the top of the 4-4 bar. And the SPX, the S&P 500. S&P goes to new highs, lower volume. You know, stretched down this morning, but lower volume. That one still wants to go higher as well. And the Dow Jones pushes up, new highs, top before 735.51, gets over it, has absolutely no volume comparatively, and we didn't even have any volume up there, so just like all the rest of them, that's a suspect breakout on the Dow. And when you're looking at these guys, you don't even have a B point yet, right? There's no B point here. There's no B point on the S&P 500. There's no B point on any of these. And so, you know, there's nothing here to say these things are going to stop. Now, we've talked about kind of the, you know, are they going to sell the news, or are they going to sell in front of the news? Well, today it looked like they may sell in front of the news, but as soon as all that selling took place, boom, right back the other way. I don't think they're going to sell on the news. They're going to wait on the news is what they're doing. And the ECB really is backed into a corner here. You know, Draghi gave a time limit, you know, and in trading and investing, anything with finance, you never want to try to put price and time together. I mean, I do it because I think it's what you're supposed to do and what you should be able to try to do and be reasonably successful at it. But so as soon as you start putting time limits on stuff and saying, okay, price is going to go here, it's very hard to be right most of the time. I mean, you either got to have a good system, or you got to be a very good trader, or something, right? Well, Draghi has put himself in that position by saying, hey, you know, this market is, you know, in needing, and market not equities, but market in the economy in Europe needs us to come in and boost it, put money out into the system, take off the debt, buy the bonds, do the QE type stuff. The market, I believe, at this point is expecting QE of some form, or at least something to the sense that it's coming. I mean, if they don't give it to them now, at least they've got to say again, just like they did with the June number, something's coming. Because the market has already priced in the rate cut and the negative interest rates at a minimal. And the way it keeps stretching suggests it's pricing in more. And right now it doesn't look like it's going to come in front of that, so Draghi's going to have to deliver. I mean, he's talked for 2 years. Now it's time to shut up and put up. And if he doesn't, it's going to be a heck of a sell-off. I doubt that seriously, because the credibility of the bank is huge. I mean, you can't talk a good show and then put a date on something and not deliver. Yeah, that would be like totally foolish. Maybe he'll be totally foolish, but that seems like a long shot bet. So SPY, new highs. Let me see what these other ETFs, while we're here, what they look like. Okay, they basically look the same. Nothing looks different. So let's look at the IWM, since we have volume on it. Okay, so what do we do here? We do 40 back into, the bar I was trying to get into was this one. So here on the IWM, there's no sellers as it came back. It's coming back into this bar, This is what it was getting into, right? This big bar here, that was the wide price spread, hammer reversal. Comes back into it, does very little volume comparatively. I'll be interested to see what the actual Russell numbers is. Maybe I'll get those before we get off the air. But as far as the ETF structure is concerned, the selling just wasn't there. Let's look at the sectors right quick. Let's pop over those guys. And there was actually a little bit of a surprise here to me in 2 or 3 of these sectors. Let's start with the IYT. So the IYT, the transports, of course, you know, it had this big blow-off bar. I thought that was going to set up a range trade. Forget the range trade. This thing just keeps pushing. I see the airlines going up. I see, you know, and just like the technology, the XLK, both of these fairly extended at this point, but neither one wants to come back quite yet. XLK certainly more so given the Google and Apple being such a large weighting, but that IYT just keeps pushing and pressing to new highs. SOX, you know, it finally got over the swing point high. It tested, failed, doesn't care, just gets over it. So the SOX now pressing higher. XLB extends real nice. So the XLE is struggling. But the rotation that we've been talking about potentially taking place is starting to take place. You can see it here on the XLF. And again, like we were talking about with the indexes, you really don't have a B point yet. There's no B point. I mean, these things haven't even began to do the retrace to set up a potential ABCD bullish structure. And so, you know, at this point, yeah, they're due, but they haven't done. And as long as they don't do it, they can keep going higher. XLI pushes higher. That rotation now, where before it was just the XLK, just the IYT, all the others were stretched trying to break. Now they've all flipped around. We've got 6 of them pushing new highs and not showing any sign of give up yet. XLV is another one. This one's actually more surprising to me than the others because the XLV is back up at the highs. And if you look at the IBB, you know, the biotechs are still quite a ways away. And yeah, they're pushing, but it's certainly not as strong as the XLB, excuse me, the XLV, all the way back to the highs already. So the only sector that's been struggling, continues to struggle. Utilities, although they're heading up to the top of the range. Here's the XLY, which is the discretionary consumer, 66.15. That is pressing into that. You're going to test it probably tomorrow. So that's the 4-4 bar. That's the bar that the NASDAQ, the broad composite, is trying to test. Market, you know, it's not totally out of the woods. The divergence isn't really gone yet because NASDAQ still hasn't got over its 4-4 bar. The Russell certainly hasn't gotten over its breakdown bars. It's only gotten over 1. But there's only one sector left that hasn't, and that's the XLY, the discretionary. So, you know, from a sector point of view, this market looks pretty good. Now, let's pop over to the OX markets because there was a big surprise over here today that I wasn't expecting, and as I was flipping through charts, happened to notice it, and that is the junk bonds. What the heck happened to the junk bonds today? You know, I mean, one day doesn't make a trade, but volume expands, big push off the highs, right? Gap down off the highs. I don't know what inside this structure. I'm probably going to look at it a little bit after I get off the air. What pushed this thing, but something definitely gave it a push, and that kind of ruined that ABCD structure, bullish one that was to the upside. So something I'm going to be watching more closely the next couple days. There's another one. Can't remember the symbol though. I was thinking I'd look at it and see if it also had the same drop today, but I'll have to find that after the show. I don't have time right now. Dollar pushing to the highs, and long bonds, and you know the dollar's going to continue to do that. It's going to test the highs until ECB does its thing. Long bonds came off. Volume expands, 11.7 coming back into 12.6. Gets into it. I think it stayed in it. 1310. Yeah, 1296. So it stays inside the big bar, which says it can get down here a little bit deeper. And if we pull over the weekly on this, you know, we've been talking about this area is going to be tough to get over. 114.08. It got over it, got up to 115.19, which is that swing point high. 114.66. It closes just under it, and now you're starting to get a pullback. So I expect this is going to pull back. But, you know, given the scenario that we have here in bonds where we've seen ABCD structures one after another complete on the way up, this one did it on the weekly. But if we look back on the daily, you know, it did multiples. I would think you're going to get some sort of a pullback, potentially back into this high, maybe into this area, and that's going to potentially set up the next ABCD structure to take this thing even higher. So bonds doing what they need to do. You really, you know, for a market to continue pushing, it has to slowly build the road on the way up. And the bonds are doing it quite perfectly, actually. And if they can continue to push, people are going to be extremely surprised if this thing really does get up into this area, because I am sure nobody expects bonds to push that far. So anyway, bonds still pushing, and you know, for now they're taking a break, and that says equities. You know, generally equities tend to go opposite of the bonds, and for the most part, not every day, but for the most part. And so that says they can move higher. Let me see if I can get those quotes in here. Let's see if they're in yet, so we can see. Ah, yeah, they're starting to come in, it looks like. So we'll be able to take a look at the Russell. Let me take a look at that stock that was asked for earlier while these quotes come in, and then we'll take a look and see what they look like. All right, so Flextronics, there's a breakout here on the daily and on the weekly. So the daily broke out, and so the question is should I just buy this breakout? That was basically the question. So let's think about what it means to buy it here. First thing you got to do is say, okay, what kind of structure's in place? There was an ABCD structure here, right, that's already completed. So that's the first thing. And then you got a little pullback off of it, which says it can go higher, right? So you take the next one. And the next one is even straight up, more straight up, right? And so that says that, yeah, there is a structure in place. You broke a B point today. You broke it on suspect volume. So the first thing I say, you know, when I see something like that is see if it comes back in tomorrow and trades back into this area, because this would be the area, if you're going to buy it up here, you'd want to try to get it down here, not up here, because your risk up here on a suspect breakout is a lot higher. So that would be the first thing to note. The second thing is if we go to the weekly and we look at it, we've got an ABCD structure in place here as well. Let's see what this one looks like. So that one goes from here to there and back up. So that still has much more room to run too. So I think you're on the right track here. I think that you've got a swing point break here. That was 2 weeks back though. You know, when you get these multiple swing point breaks, multiple time frames, you really want them coinciding, same time. In other words, the weekly breaks, the dailies break, and they do it all together, right? That's when you get the thrust, right? The thrust that, you know, that's because there you're breaking swing points, multiple time frames. You're more than likely going to see a lot of stops taken out if, in fact, there are stops up there. This one's a little bit different in that you had, you know, you're already a week into it, so you've already got your extension. So you don't know if that extension is going to continue. Looks good. I would see tomorrow how it trades. Does it trade back into this bar and stay in it? If it does, I'd probably wait and try to catch the bottom of the bar, right? Because you're going to have to, you know, when you say you're going to have a tight stop on this, you're going to have, if you buy it up here, you're going to have a very tight stop because you've got quite a bit of risk. It's 2%. It's not too bad. I guess you could trade it back down into here, take a 3.5–4% risk. If you take it all the way back down to here, that's 50 cents. That's that's a pretty good risk, right? That's a pretty big number. So I think you're going to want to. I think you're going to want to try to see if you can get it in this area. It looks good though, and I think there is a trade in it. You just have to try to measure where it is. All right, let's take a look at the chart here for the indexes right quick. Let me pop them back up so we can see the Russell, and then we can actually pop over and see the foreign markets. All right, so the Russell, yeah, is also lower volume, so it's perfect. Same setup. So yeah, this Russell's going to flip around now and go try to test these highs. That's what it's going to do, and it's going to do it in front of the ECB, and that also suggests that those other indexes are going to carry a little bit farther, just as they have been. Let's take a quick look and see what it looks like overseas, and then I'll take any more questions that filter in. And where are my markets? There they are. All right, so let's start. Actually, let's start in Europe, since that's where all the action is. Okay, so the CACs really can't move. You know, if it wasn't for everything happening in Europe, this thing's a short. But and I say a short in the sense that as soon as it gives you a short signal, it's a short. It really isn't a short signal here. But this economy is stuck in the mud at best, right? It's a big X to me. And you know, when Europe finishes playing out whatever it's going to do, this to me is the index to be shorting if you're going to short any of them over there. Here's the DAX. So the DAX pushes up, back down, no volume. DAX is going to pull back in a little bit, it looks like. FTSE pressing to new highs. Well, that's not FTSE. Let's get the FTSE up. Oh, here we go. FTSE. Yeah, that one looks pretty stuck too. So Europe doesn't look like it's going to move much, and that's probably going to keep a little bit of a bottle on our markets. So it looks to me like more grind, push, right, hang in Europe, but no real, you know, takeoff kind of action in Europe. That doesn't look to be the case. So Hong Kong, Hang Seng, both of those were. Hong Kong and the Shanghai markets were closed. All the action last night was in the Nikkei. The Nikkei burst out, gets over that you know, there was two ranges in effect here. It gets over it, and it gets over it on news that there's another QE type program coming into place in Japan. What they're doing is they're moving pension funds around now to depreciate their yen farther, up to as much as, you know, 10%, and that's going to boost price, and that's exactly what happened. And so this now looks like it's going to go up and test these highs again. So first you got to get over this one, and then once you get over that, then it's this one. So Nikkei, just like our markets, wants to break down. Instead of breaking down, it's back the other way. You got an ABCD structure. You know, you got one in place, and it's very tightly drawn, so it takes you all the way back to the highs. Amazing. These central bankers, folks, they are part of the fabric now. I mean, they are definitely part of the economic and the equity fabric, if you will. And they, as a result, are so much of what moves these markets anymore. It's kind of sad, but it's not you know, it's not, you know, it used to be you could pick stocks. I remember back in, you know, the 1990s and the 2000s, you could pick stocks. You could find good stocks. You could find bad stocks. You could short those. You could buy the good ones, and you could certainly feel fairly comfortable in your stock picking abilities. Anymore, everything just gets pushed around, you know, one way or the other, either big one way, big the other, and it's very difficult to pick stocks that you can stick with for any period of time. It's hard to find them. It's hard to stay with them. All right, we got another question here. Oh, ex-dividend on junk. That's maybe what it was. All right, cool. So that might answer the question. So one of the viewers here is telling me that it's ex-dividend, and that's probably what this is. Yeah, that's probably what it is. Okay, great. I'll have to look and make certain of that, but actually I can look right quick and see. Junk, J and K, and we can see if it went ex-dividend today. And doesn't even. Yeah, there it is. July 2nd. Yeah, that's exactly what it goes on June 2nd. So that was probably almost the entire move today. Perfect. Thank you. I appreciate it. And why do you not look at mid caps? They have been rising. All these small caps have struggled so badly. No, the mid caps are fine. I mean, the mid caps have done better. And actually, this weekend I did look quite a bit at the mid cap indexes, and I looked at a bunch of the Russell variants. The small caps, the thing about the small caps when you look at that index is it's not weighted. I mean, the highest weighting in there is like 0.37, 0.38. If you look at any of the other indexes, you know, take the other extreme, the NDX, 23% is Apple. You know, the small one, because it's diversified, now it has the negativity, if you will, if you want to call it that, of being quote-unquote domestic because they're small. But I didn't find, and I did look at quite a few indexes this weekend. I didn't find any that gave me, you know, I looked at equal weighting. You know, they didn't seem that much better either. You know, the mid caps, what is it? I don't have a symbol. You could probably give me a symbol offhand, but they look okay. They're not doing bad. And yeah, maybe it's just the small caps struggling because they're domestic, right? And they're not going to benefit as much until, you know, if we see this economy take off, those small caps are going to come roaring back. Right now, that's what it's telling us, right? It's telling us that the traders, the investors, are not sure this market is going to take off, and that has a lot to do with the fact that they're trading this way. IWR, let me put that in. So this is the mid caps. Yeah, but you gotta be careful here. If you go look at what's inside this is not what you think it is. If you pull up, and I don't have time, I've only got a minute. I'll do it for tomorrow. But if you look at what's inside the mid caps, what they're calling mid caps, it's not mid caps. I mean, it's big caps, and it's weighted. It's weighted heavily, right, comparatively, and that's a big difference. So you have to be careful. You know, I looked at all these variants on the Russell this weekend. I looked at about 15 of them, and they aren't true. You know, I mean, there was ExxonMobil, there was Apple, there was all these IBM, all kinds of things in them. So be careful what you're looking at when you say, you know, mid caps, because I don't think it's what you think it is. All right, I gotta take off here. It's the end of the show. It looks to me like we're going to keep trying to grind. The problem with trying to grind is that you're going to get that big jerk down at some point, but you don't never know when it's coming. So it's not like you can trade it unless you get a clear reversal signal. Right now, there are no signals, so you keep going with it. Until next time, that is the show for tonight. I appreciate you being there. Tell a friend, tell two. As always, I'm here for you. I'm LA. This is, and it was, your daily TA wrap. Have a great night, and I'll see you next time. Good night, folks.